The Fed and our government said a lot of things that were lies. What do you want to do? You want to start trusting them now? No chance.
Welcome back, everybody, to Altcoin Daily. My name's Austin. In today's video, I want to share with you the latest news involving Bitcoin, involving altcoins, as well as why you're being lied to about this crypto market. If you're interested in making money with cryptocurrency, click subscribe right now. We drop a video every single day demystifying this cryptocurrency market. Let's jump in, starting with that CNBC clip and what just happened involving Jack Mallers' company, Strike. Welcome, Argentina. Today we launch a superior financial experience to a country that faces hyperinflation, predatory payment networks, and unusable cross-border transfers. Today, we use the world's open monetary network, Bitcoin, to give hope to the people of Argentina. This is huge. This is a huge step for adoption of Bitcoin, because what this means is that anybody that just has a cell phone in Argentina can now send instant, feeless cross-border payments in Bitcoin or regular payments on the Bitcoin network. Now, like the video, get this information out there. And that brings us to our main clip that I want to share with you today. Listen to Jack Mallers' response after the CNBC host asks Jack where he sees the price of Bitcoin headed next. Jack obviously says up, but listen to his reasoning on why. That despite the manipulation of the monetary system from the Fed, from the US government, it's Bitcoin that is the most transparent monetary network that we have. This is about a 2-minute clip. Watch this.
Let me bring this back to those in the U.S. who are wondering about the value of their crypto, Jack. Not that Strike is here to make a prediction on Bitcoin, but it is in Bitcoin network is inherent to the product. So where do you think the price of Bitcoin is going from here, and how much does it matter?
Up is where I think it's going. Listen, Kelly, when the monetary policy, the supply, the issuance of the asset is known, the only missing variable is demand. And people are in high demand. The Federal Reserve has perverted risk tolerance across all assets, and the savings account has been robbed of the everyday person. They have to store their value in something else. Housing is not going to have every 4 years. There's not a fixed supply on any precious metal, any security, any equity. Bitcoin is the premier asset, is designed and engineered by us human beings to resolve of this exact problem of preserving and storing and saving wealth. And so I think it's up. It's going to appreciate against any denomination it's paired against.
Is it, though, Jack, a different environment? All of the arguments that you're making, now we have a Fed that's out there talking about, tightening policy quite considerably.
Listen, I mean, Kelly, it's an insurance policy. The Fed and our government said a lot of things that were lies. What do you want to do? You want to start trusting them now? No chance. And it's really quite ridiculous. The Federal Reserve has perverted risk tolerance across all assets. No one knows the cost of anything, and it's really jeopardized the middle and lower class in particular. And now you have venture capitalists raising billions of dollars and advocating that people store their savings and their kids' college tuition in cartoon drawings of deranged apes called NFTs. It's an absolute madhouse. It's disgusting. And Bitcoin is the signal. Bitcoin is the peace. Bitcoin is the future. It's the only monetary policy that's defended within a truly distributed network that we can rely on. The rest is noise. And whether they're lying now, telling the truth tomorrow, lying next month, it doesn't matter to me because I've subscribed myself to a monetary policy that I can trust and I know won't change.
All right. Give me your thoughts on this down below. And when you hear the Fed say that the crypto market, that Bitcoin is the most manipulated, that's a lie. Bitcoin's just code. It's just math. It is a publicly viewable, immutable monetary policy. That's my opinion. Again, please share your opinion right now down below. And next up, let's move forward and talk about the latest news that affects you as an investor in this industry. P.S. Check the timestamps at any time. Find the news that's best for you. Derivatives are officially coming to Coinbase following their purchase of FairX. So America's largest crypto exchange, Coinbase, announced it has acquired derivatives exchange FairX and plans to begin offering derivatives trading to U.S. customers in the future. So here are the details on what exactly is FairX. FairX is a designated contract market, DCM, derivatives exchange regulated by the CFTC. Despite being relatively new to the market, having launched just last year in May, FairX has secured brokerage partnerships with industry leaders like TD Ameritrade, E-Trade, among 18 others. So instead of Coinbase having to get the green light from the CFTC themselves, having to secure all these brokerage partnerships themselves, they just acquired a company that already had them. In a direct quote from Coinbase, "We want to make the derivatives market more approachable for our millions of retail customers." Plain and simple, Coinbase wants to make money because crypto derivatives account for a lucrative $135 billion in 24-hour trading volume over the past day, according to CoinGecko, and in comparison, that puts it far above the roughly $55 billion in spot trading volume across crypto exchanges in the same period. Me personally, I'd rather hold Bitcoin, not trade on a value that Bitcoin may be in the future. But I do also believe in a free market. Everybody can make their own decisions. So this is coming up. Give me your thoughts on this and let me know if you're going to participate. Let me know. And next up, in 60 seconds or less, I want to give a big shout out to sponsor of the channel, Okcoin. A better way to Bitcoin. Join the fastest growing global cryptocurrency exchange with the lowest fees around. And that's true. They do have much lower fees than the competition. In fact, if you want a breakdown of how this works, I will link our interview down below with Okcoin's head of listings. It's titled "The #1 Cryptocurrency Exchange with the Cheapest Fees." Link down below, check it out. If we take a look at the variety that Okcoin has, we can see they have some of the top cryptos in the space, like the Cardanos, the Polkadots, the Shibas, the Polygons, as well as those new lower cap altcoins like Miami Coin, like Metaverse Coin, Star Atlas, or Smooth Love Potion, etc. And last but not least, if you use our link, that's Altcoin Daily Okcoin, link down below. If you use our link, you get access to 100% feeless staking, meaning that you keep 100% of all staking rewards earned. Link down below, check it out. And moving forward, next piece of higher cap altcoin news involving Solana. Solana could beat out Ethereum to become the Visa of crypto. That's a direct quote from the Bank of America. Wow, so huge support for Sol. And actually, here is the direct quote. Solana could become the Visa of the digital asset ecosystem, says Bank of America's global crypto and digital asset strategist. He cited the more than 400 decentralized applications on Solana's network, which hosts everything from peer-to-peer exchanges to NFT marketplaces. Very interesting. I would think that a lot of the other layer ones have at least 400, if not are coming pretty close. But either way, the Bank of America likes Solana. They do also reference Ethereum. Ethereum, meanwhile, could become the blockchain for high-value transactions and identity, storage, and supply chain use cases. So he's essentially saying that because Ethereum is the most decentralized, the most censorship-resistant in terms of dApp platforms, the big money, the high-value transactions will take place on the Ethereum network because it's the most trusted. And then for different use cases that have different trade-offs, maybe like gaming or maybe just DeFi in general, that need much more throughput, but not as much decentralization, those would go to the other chains, I believe is what he's saying. The last thing I want to point out is the Bank of America's stance on Solana isn't all flattering. In a direct quote, Solana prioritizes scalability, but a relatively less decentralized and less secure blockchain has trade-offs, illustrated by several network performance issues since inception. So Solana has been shut down a few times since inception because the network was clogged, which obviously, if you can shut down a network for a time, it's not as decentralized as an Ethereum, for example, but maybe that's the reason, one of them, that the Bank of America likes them. I'll keep you updated. And next up, let's talk about crypto gaming. Axie Infinity's gaming sidechain is bigger than many major layer ones by volume. If the future of blockchain is multi-chain, then Axie's Ronin, which is the sidechain, is leading the way according to new research. So these numbers blew my mind. Axie's sidechain Ronin to Ethereum, for example, at its peak in November, Ronin, which is a layer 2 product from Axie Infinity developer Sky Mavis, devoted solely to the Axie game, processed 560% more total transactions than the entire Ethereum blockchain. And that was, of course, Axie at its peak. Looking at where we are today and how it compares to other layer 1s, Axie Infinity has over 2.8 million daily active users, and as a result, Ronin is processing 40% more transactions than the entire Avalanche blockchain, one of the most popular layer 1s by transaction volume. I think this speaks to just how big crypto gaming will be and how it is now from one of the blue chips of crypto gaming. The people doing the research did have an overall takeaway from this, which is we'll probably start seeing a whole lot more sidechains like this that aren't for everybody, but are just for the use of one specific use case, tied to one specific thing. In a direct quote, what stood out to me was the sheer number of transactions on the chain relative to other layer 1 solutions like Avalanche or Phantom. That alone is a signal for other similar layer 2s to be created. If one single game demands so much out of the underlying blockchain, what happens when a chain is home to multiple games? So they're saying that if mass adoption is to happen, we're not going to have every single crypto game on Polygon, for example, even though Polygon is a layer 2. We are probably going to see hundreds, if not thousands, if not tens of thousands, specific sidechains for all these games. All right, that is the video. By the way, I do want to give a big thank you to all of you. We just reached 1 million followers on Twitter. Really appreciate all the support you have given me and my brother over the years. So thank you. I really appreciate you. And that's the video. So like always, see you tomorrow. Appreciate you.